Welcome to DXgov Governance Discussion, February 17th, 2021. Wanted to start first with talking a little bit about community rep boots. This is something we try to do every month to promote different people that are in the community. So I just made a post about it. I know we're dealing with a lot of gas issues, which are complicate everything. And this is kind of something that is hard to conceive of in this type of gas environment. But I think it's important just as we're actively doing it. So if you have any other suggestions or people, I actually had one Snufkin who was in the Discord that I thought was making some interesting points. So I nominated that, but anyone else, feel free to reply on the thread. Cool. And then next, wanted to switch to the governance refunds because we said that we would do a demo of it on this. And so just as like the one, I guess this is the gas refunds 3. I actually think I might have already done this with one address, but I have a separate staking address, so I can do it with that. So this one I think was passed on January 6th. So that was like last month. So I think this is the 3rd one, or actually the 4th one. And then we're probably due for another one this month, but that contract has not been, or the proposal has not been submitted. Share. Okay. All right, so this is the governance refunds number 3. So this is what Nico has done every month. It's so I don't exactly know what this is, but I guess it's calculating all the addresses that spent or transacted with DXDAO over a certain time period. And you can see this is the results. It was 92 votes, stakings, proposals. And then to claim, you go to, well, you're going to go to Etherscan, but where's the?
It's the post a little bit below. Like it's always the first post is the configuration, and we are waiting 1 or 2 days until it's just a bit more down in the original post.
Here it is. So I actually think I've claimed this, but let me just see. So so this is the address for the one I hold. So 0x9162. I think you can find me. Right there. So I'm index 12 there. And so then I go to this, go to contract, write. So I'm going to connect to Web3. Etherscan is a beast. And then I just claim I'm number 12. Not entirely sure if, oh no, that's a lot of gas.
Don't do it.
Yeah, no, don't worry. I don't have insufficient funds. Maybe that's because I've already claimed.
If it's like a really high amount, so a few hundreds or even thousands of dollars, it's because the transaction will fail. That means it's already claimed.
Let me try a different address that I boost from 0x2b4c. Yeah, okay, so 41. Should have one staking, I think, from this. Connected, yeah. No. Well,
now that everyone can see how easy it is actually pretty easy.
Yeah, it's the hard part is the index and the other one, but now I guess I gotta switch to this.
Chris, I'm not 100% sure, but I think when you were in the DAO post, you switched to the refunds number 0, and that's why the index numbers got wrong. It's like the correct address is like really in this post somewhere below. We'll scroll a bit down. I think we switched to the refund one. Yeah, there it is, the contract.
Yeah.
There's
yeah.
So you're telling me there is free money still for me?
I hope so.
So I'm hopefully going back to this Etherscan. So this is 12. Connect to Web3. What are we at right now? 234 is a lot. It doesn't need to happen. But if this is like a normal transaction, it's still less than $10. I'm not gonna. What do we think? Should I do it? Yeah.
What's happening?
What's the cost?
234. It's $18 because you can't see my MetaMask notification, can you? Oh.
No.
Good. Yeah, it's 234 Gwei. Do we think it's going to go down today? And that's $18. Gas limit is 44,000. We'll see. Okay, I put it in around like 200, so we'll see. So just as a recap, now that we did that here, it's on this post, and that's how you kind of get the gas refunds there. The key part was getting the contract there. So, but anyway, now that I've exposed my public address, though, this is why everything is from there is already public. So, cool. And then, is there any other gas talk? I know we can get to XDI later, but just I think there was we wanted to maybe up the multi-sig gas subsidy.
So on that, there's a handful of operations that take place using different multi-sigs. Well, there's an Omen Swad multi-sig, and then there's the DXgov multi-sig. Obviously, the person, the final confirmer of all multi-sig transactions ends up paying whatever the gas is at that point. And for like these 1-inch conversions, it overestimates it, and so it's often less than what you see it's going to be, but it's still in the hundreds. It can be in the hundreds of dollars, and so that's like an additional cost to just executing like a bunch of these conversions and multi-sig transactions. And so there was talk that like in one of the next authorization proposals, maybe include like 1 or 2 ETH as like gas money that could be refunded to the actual proven confirmers. Like we could just take a list of all the confirmation costs, gas costs of the last month, and just send the money to the address that made that conversion. So it's almost like gas slush money. Right.
I was going to say, so like, the gas is paid ultimately by whoever, usually the last signer, right? The signer of
Exactly.
the transaction, right? So, but if you would fund the multi-sig, could like the fund, like
No,
it doesn't.
no. It has to. It has the money has to come into the actual individual's account who confirmed the final transaction.
Yeah.
So it has to. We can do a couple ETH of gas money into the multi-sig, and then we can just give that gas money to the different addresses that did the final confirmations over the last month. And it's just you're sending it to the same address, so it's all on chain and transparent.
Yeah, I mean, it's definitely about the cost of transaction here, like especially because this is the Treasury authorization or diversification coming from that. It's like, the same way that you're paying a fee to 1inch, that this is all kind of wrapped up into that transaction. So I think it would make sense to tie it with the next proposal.
Yeah. And with that also, like the proposal you just wrote up about getting funding XDAI with some funds as well. For example, the bridge transaction from the multi-sig is kind of a tricky transaction. So in that case, we'd probably want to do like a test again. So like do it for like 1 or 2 ETH, and then before we do the bridge transaction for 100 ETH, right? So like that's, even though that test economically sucks because you're paying $300 to send 1 ETH, overall, I think it's always safe to do a test transaction. And when we need to, and we're doing something for the first time in a while, even though it's economically bad, I think we should do these test transactions.
Yeah, I think these are, as you said, mentioning them in the proposal ties them up, because it's all part of this process. And I think it's important then we also figure out like the best and cheapest way to be doing these things when we're putting them in and knowing the cost. And so, yeah, I think that makes sense for any of those. I guess not for the XDAI one. I think the proposals are submitted, but we can do that on the next one and try to get reimbursed for this one. So I think it makes sense just to do it on the proposal, just in general.
Yeah. So, some people have done that in the past on their own personal proposals. Like I'm claiming rep, and it's going to cost me 0.1 ETH to claim the rep. So I add 1.1 ETH in that proposal. We've had some scenarios like that. In this scenario where the dev multi-sig is doing, a bunch of these conversions to get stable coins into DXDAO, I don't know if we need to put the actual, because we don't know the gas cost in that actual proposal, right? We could estimate it, but once we do 10 of them, we're going to know this is how much gas was spent over those 10 proposals, and we could just do a refund for 100% of those 10 proposals. So I don't think we need to do it in every single one, but once we finish this stablecoin authorization and we get 3 million of stable coins, we'll know we'll know all the gas costs, and we can just refund all the gas costs or something like that, right?
Yeah, I mean, I think part of this is about like when we're making proposals and like presenting information, just being like having all of the logistics planned out and being clear about exactly what's happening, and then the cost like upfront too. So I'm just thinking it's a good thing to be thinking about when we're making these proposals for moving funds like to and doing something with them, just accounting for all the costs and different transactions that will be involved.
Yeah, so we can note it. We can note it in the proposal, even though we don't know what the actual gas cost is. Yeah. Okay. Cool.
Yeah. Cool. And then, and so I think the next proposals of the multi-sig can include that, and then I think we'll be thinking about other things with gas refunds for now. But hopefully, we're gonna take a big chunk out of that with the XDAI worker proposals. Then just moving to proposal roundup, just going through the current proposals in the queue. So we have a couple different worker proposals that are there. Dev Violet, Keenan, myself, Roy from Omen. There's also the Omen arbitrator audit and security review. So this is something that will be engaged Phil, the auditor, for to make DXDAO or to be the arbitrator on an Omen market. So that's one. And then I think it's also to do a larger kind of look at some of DXDAO's security offerings there, or posture. It's a good word, security posture review. There is a member balancer one, the 85 ETH for 153,000 DAI, just a little bit on the treasury. We are getting a little heavy on the DAI. So I think the original proposal had going for $3 million of stablecoins split between DAI, SUSD, USDC, and USDT. So I think it was 900,000 DAI was the goal. And so we're probably at, I think, like 550,000 now. And it also appears that people like being paid in USDC. Just some notes in terms of how the treasury diversification is coming. And then, then the two pending boosting proposals right now are both kind of interesting too. One is the authorize and fund the XDAI base. So this is trying to move worker proposals there. So hopefully we can have this in line for the next round of worker proposals. And we'll run the same system and process there. But we'll actually be paid out on XDAI there. That also has 100 ETH to be transferred and to fund the DXDAO base on XDAI. And then there is,
on that. So if we're going to start doing most of the worker proposals on XDAI, obviously XDAI, you need DAI. So if there's going to be every couple months, like funding of worker payments on XDAI, that would be like a continual flow of DAI. So that is in addition to probably the $3 million stable, right? Like those are additional every couple months to like fund the payroll that's going to be happening on XDAI. In place of, like, I guess this breakdown that we had laid out is really for use maybe on Swapper and other things as well, right? So that's the importance of DAI in the XDAI payroll mechanism, right?
Yeah, I mean, I think we're seeing how things evolve, right? So just and seeing what, in this case, like XDAI, it shows we need to have DAI in the treasury probably to do worker payments. It also seems like USDC is something there. So I think we're going to have to respond and see how things develop there. But I think this is what we were talking about last week. The budget is kind of, that is trying to imagine ourselves in like a multi-chain world and more of just from like all of DXDAO's assets. And this is, a trouble we're going to have is be able to manage it across chain. I think we're definitely like the $3 million for the stablecoin was definitely in part to have runway and to be able to also diversify, supply things on Swapper. I think we need to get to that 3 million, and I think we need to get to like 1 million. But it's clearly like when we put stablecoins in the treasury, they're going to like start coming out because that's what people want to be paid with.
Yeah.
I think we should probably start thinking about what the next authorization proposal would look like once we hit the 3 million.
Yeah, and also, I mean, I don't know the current market sentiment, but maybe we should increase the request amount. Right now we do 100 ETH. We get lucky with ETH is actually staying pretty stable and potentially going up even further. But we might increase the request amounts to the multisig just to make sure that we actually have this 3 million diversification. So we the whole collective is assured that we have a proper runway.
So there's two ways to increase that. We have the rules outlined in the authorization proposal. We could say instead of 100 ETH, it's 200 ETH or 300 ETH, or we could just keep it at 100 ETH and just do more proposals. We're doing one we do one no more than every 2 days right now. So you could increase that as well, but keep them in sections. But then that's more proposals. Milan had raised a point like, why not why not do a lot more all at once to just do it in one proposal? That is another possibility, but with that comes risk as well. But the more that the multi-sig does this, the more comfortable people are probably using the multi-sig for larger amounts. It's like reputation built into the multi-sig, I guess.
Yeah, maybe for the next, if we do another authorization proposal, we could increase the floor on that for the multi-sig. But so, I mean, at the current rate, we can do like over $500,000 per week. And I think it's already, I don't know exact numbers, but it's been somewhere between $500,000 and $1 million has already been converted.
Yeah. I think about 650, a little less than 650,000. So there's 600 in there. There's 566,000 DAI and 63,000 USDC. And there has been some requested already. So
the other thing would be to tweak what is allowed using member balancer and potentially increasing the incentive there. Like we could have 5 million stablecoin tomorrow with the right incentive in place.
Yeah, like it's clearly not enough. We see that I think no one is actually doing it besides the few proposals which happened. I think 1% is not enough. Just the proposal creation and then withdrawing the ETH back, it's like $400, I would bet, which is like 0.3 ETH. I think it's not enough. I think we should increase it to at least 2%.
Yeah, I think that could be a good move, but I also suspect that it's maybe also an issue of just who knows about this and whether they can do it, right? I sort of doubt that many people outside of like the people in attendance here actually understand what's going on and what the opportunity could be.
Yeah, I mean, even in this small group, like no one is doing it, right?
Yeah, I mean, there's a couple of big problems, right? Like one, you have to have a lot of ETH. And then two, if you are in a place where even just moving trading the ETH for stablecoins causes like a capital gains tax, you potentially have a huge disincentive that even 2% is not going to change, right? Like, so I don't know.
So a couple things. So it is originally named Member Balancer because the idea was to keep it within like DXDAO community, right? And but you could open this program up to outside the community, and like you could let more and more people know, right?
Well, I think technically it is open, right? Right now, I don't think it's restricted to rep holders or anything.
Yeah, like I strongly bet against the idea. Like literally, no one will send any money to some DAO without actually knowing the members. Like I'm very skeptical that someone on Twitter will send 100,000 DAI to the DXDAO with the hope they will get ETH back in 7 days.
With the right incentive and like the record of the past proposals that already did it, like you never like I think they would, to be honest.
And sure, but then the right incentive is a huge cost to the DAO, right? Like at 2%, it's 20K per million. And at that point, maybe you just wonder, could we just do this with the multi-sig, right? Like, and not incur anywhere near the cost.
Right.
Well, if ETH goes down 5%, like that throws that whole thing off anyway. So it's a matter of like when we want to do it. We're right now we're averaging in, which is fine. ETH goes up, it's fine. But if ETH starts going down, then it's bad that we didn't do the more faster.
I agree. Like those two actions are different. Like the member balancer is dynamic, doesn't require to wait 7 days for the DXDAO, right? Like the DXDAO is paying a premium to get the trade before the 7 days. That's the difference. With the multisig, we request 7 days, and 7 days in crypto can a lot can change in 7 days.
Right, but it could go up just as likely as it could go down, especially with Bitcoin crossing the 50K mark here. But I mean, I think the question is, like, at what rate do we want to be converting? Right. That's the first question.
Yeah, and just so the Treasury diversification authorization proposal passed on January 24th, right? So we're February 17th, so we're about 3.5 weeks so far, and I think we had about 600, a little over 600K converted, and we're doing now about 500K a week. So that would get us to 3 million in like 2 months, I guess, a little under 2 months, which like seems like the right path. I'm concerned about the transaction costs for these because I think it takes, we are doing a bunch of different things, whether it's the proposal cost or just the other components. But like to sell like 3 million over like 2 months, that seems to me about the right pace. But I don't know. I guess people are more eager to diversify.
I mean, so from the start, DXDAO is ETH based, right? And we now have this plan, and we're slowly executing this plan. ETH could continue to go up, it could go down, but it's much higher than it was when we had no plan 3 months ago, or 4 months ago, or 5 months ago. So like this pace is better than what we were doing, and it can continue to go up. So I think just continuing on this path the way we have it is okay. Like even if ETH goes down, like we still are okay, yeah. Right?
And we started, I think the first one was like 1250. There was a couple different buys at 1250, diversification there, and then like we've had a couple at 1800. So like we're on this, maybe I don't know what we'll end up averaging in, but it'll be around this area. It is just involves a lot and takes patience.
And I think a good way to think about this is runway. It's at least the one context I like to think about it. And we looked at the budget. The goals are sort of to get up to $3 million a year burn rate, which is, totally doable with the current treasury. But I think we should be planning for 3 to 5 years of runway in stable coins, because basically once the market turns from bull to bear, you basically don't want to be spending your ETH, right? So like so I think like ideally before the bull market turns, we want to be at something like 5 years of runway in stable coins. So to me that means like by July we should be at $15 million of stable coins.
So we could also just do a current, like today, a new authorization proposal that layers on top of the current one that gives authorization to do 300 ETH at a time instead of 100 ETH at a time, and that would speed things up dramatically.
Yeah, and I think given the track record of if the multisig like successfully moves 2 million, then like upping that limit I think can make sense. Yeah.
Yeah, and also like this new change is a result of we need more time to test the Gnosis protocol relayer, right? Like the goal was to actually use the Gnosis protocol integration to eliminate the multisig, but as we see, we need more time, and that's okay to test our connections, but we need to like change the other types of diversification, ways of the DXDAO, just to make sure we are actually getting to our goal.
Yeah, I actually, just to agree with Augusto here, I think we want to be there's a certain point where we want to like be at with diversification in terms of not being so crypto exposed. But then I think at a certain point, we do want to be considering loans on the ETH, because it'll be very low rates, you could get what 4% or 5% is what notional is on, right? This is what a lot of companies do with even centralized components. And so I think there's some way of combining that and managing like that we need to think about here. And I think those are like the next layers and steps.
Wait, sorry, what's the rationale for a loan?
Because ETH is going to go up. And like, I don't think we should be like selling all our ETH.
Oh, but I mean, we're nowhere near selling all our ETH, right? Like we are.
Right. But I'm saying, I think you can like, if you need like to fund operations, you could take out a loan on the ETH, and then you would still have
right. Yeah, if you wanted to get more bullish on ETH and still cover operation costs, you could take a loan. But I think we're in the opposite position here, where we're
but I think we
maximally shifted to ETH, and like the first thing we should be doing is diversifying. Like we want to be moving in the other direction, is what I'm saying. Like we don't want to be increasing exposure to ETH or preserving exposure to ETH. We want to be decreasing exposure to ETH because the treasury is 90% ETH right now.
But if you are, for example, if we want to take enough stablecoins to last for, let's say, 5 years, that's a long term, and on that long term we can go bullish on it. I mean, even if the price is going to correct, like we are all expecting, and if you've been in crypto for years, you know that it will happen eventually. I still think that going bullish, going long on ETH for a 5-year runway, that would be super good. Even if we, for example, we can do, that is why I mentioned doing both options, sell some Ether today at the current price, let's say for the, next 3 years. And we can also calculate how much more it's going to take if we wanna take a 5-year runway, right? And also take some exposure on a DAI collateral loan, where we can freeze at the moment at the current price. And in 5 years, if let's say Ether is $5,000.
The problem, there's a couple of problems with it. I mean, the DAI collateral loan is a way to like preserve your exposure to ETH, but you also have to pay for it, right? You're paying, the current rates are like 6%. Those are likely to go up in a bear, like I don't know. You don't know how, like last bear market, they hit like 17% at some point. So you're like exposing yourself to that risk. And then you're also exposing yourself to liquidation, right? Like, I mean, if the price of ETH goes down far enough, that DAI loan could really bite you. And so, I mean, look at the treasury now, $37 million worth of ETH and only $500,000 worth of stable. Like, I don't think we're anywhere near the point of needing to even think about a loan. Like, we should be increasing the amount of stable coins, and we're still super bullish on ETH right now, right? Like, we could move 15 million into stable coins tomorrow and still be bullish on ETH, right? We'd still be more than 50% ETH.
Also, there's another way of signaling being bullish on ETH by just using that ETH as liquidity on Swapper.
Yeah, I think that's what we're going to realize is, just as we realize, like, oh, we need DAI on XDAI for our needs to pay workers. Suddenly we're going to be like, well, we need this asset in Swapper, and we're going to like, push that there. We're going to fund the Omen squad. Mesa is going to need something. Like, we're going to have like treasury needs that are going to fit our products, and like those are going to come together. I do feel like we have like some type of like organic journey almost, where we have lots of different lots of different people, different perspectives, and like raised money in ETH, and then has been on this like bull run here. And I think there is a world where we're riding it very well, not perfectly, and that is just a selling when diversifying when we need to, and then kind of using it in the product. So I think we're not gonna figure out the perfect strategy, but I think these are all good perspectives. And I think just like companies lending against their crypto is, that's a pretty common thing that's a lot of like maker ones, and I think Gusto is right, is if like there's part of the diversification thing, and I don't think we're anywhere near there yet either. Like that's what we should be selling stables. But that's, you know, when we think about how eventually to finance, that's a way. And also because like DXgov should be thinking about where like even lending out its ETH now, not that it needs to like use it, but just for the loan, but just like we need to be thinking about how the treasury assets are put to work.
Yeah. What about diversifying with, you know, there's all these sort of hedge fund DAOs happening right now, like Rari Capital and.
Yeah, they seem to have a great track record.
That sounded sarcastic.
Well, I just think like all the hedge fund stuff is like interesting, but like that's where all of the hacks are happening, because it's like they're just taking advantage of like arbitrage and yield farming opportunities and like living out the risk spectrum. And so I think we can think about that, but that was my comment. It was a little
So I think like in the diversification, like we can take some of that ETH and even put it in YFI, or, you know, in any of these things, kind of that, you know, that's managed DXDAO treasury, which I think would be good.
Yeah, I mean, I think if we wanted to put, go ahead, John.
Is no one thinking about BTC?
Hey,
have you not seen
last
the
time I
meme,
said
dude?
this,
Me trying to have a normal life, and then Bitcoin is there, of course.
you know, last time I said this, I think Sky said "Okay, boomer," when I said we should diversify to BTC. So
turns out the boomers have all the have all this generational wealth that they can.
No,
BTC.
Elon, that was not me. I would never say that. Trust me.
I don't remember. Someone said that.
It wasn't me.
I'll find one of the calls, like 6 months ago or something.
Well, I mean, ETH has done just fine against BTC in that time frame. So I mean, I don't think we made any bad moves, but yeah, I think in the spirit of diversification, like we should diversify. Yeah, BTC is a natural place to go.
Yeah, we still have a plan to hopefully do probably like TBTC and have a swapper pool, and like that's a really good reason to have, you know, $1 million in a BTC asset, or maybe 2 different BTC assets, and put them into swapper. Like that would be awesome. Like it's good like ETH, it's some diversification, but having 2 more swapper pools would be awesome.
Definitely. And like that's like what will come, right? It'll be like, oh, here's a treasury diversification need, and then like, here's a product need. And we can, you know.
And we have a plan to, you know, get those incentivized, hopefully, or actually, you know, maybe even DXDAO gets a reward for creating those pools. So there's going to be opportunities like that, and we have the capital to lead with our capital and negotiate deals with projects. You know, maybe it's even like, what is it? Rye is coming out very soon, right? Reflexer DAI. It's like we could potentially get involved with a pool around that as well. And that's another stable coin. So there's lots of opportunities. We just need the tools so that we can take action on these opportunities, I think, which we're working on.
Any other thoughts? We kind of let it go a little bit there, but I think it's a good conversation.
Yeah, I think maybe in one of the upcoming Gov calls, and some of us could draft proposals for like what the next kind of authorizations would be, like whether it's, you know, some kind of BTC or increased moves into stable, like keep the pace going on the stable coins.
And I do think we should be thinking of someone that is looking at this like full time, because it is like at the end, it is kind of evaluating like investment opportunities and like balancing these things. Cool. And then just kind of 2 other things to update on. I just wanted to, so we are still working on the halt the bonding curve. We need a UI fix from Alchemy. And then we ran into some problems on the liquidity deposit for Swapper on the test deposit there. So John, I don't know if you wanted to provide a little bit of an update on that.
Yeah, happy to make, and we should have a postmortem coming for DAO Talk on both the relayers and the couple of issues that we've had with the test proposals. It actually wasn't the relayer like malfunctioning per se with the liquidity deposit, but the inputs are a bit confusing. And when I made the proposal, I basically got the reserves backwards because I made the assumption that the reserve A would go with the token A that you input, and it actually turns out that it can vary based on the tokens with the contracts, and so it failed to actually make the deposit into Swapper because when it was checking the price on Uniswap, it was looking for a minimum kind of ETH reserve, but using the DAI number that I had put in for the reserve. And so basically it couldn't get the Oracle price and then wouldn't do the deposit. I believe the funds are recoverable. I know Nico has been doing some work kind of like assessing this, and also kind of like the kind of most important takeaway here is the lesson that we probably should have learned already is that we need better integration testing, and we need to do more testing and take that more seriously. On testnet and potentially XDAI as well as an intermediary step. And yeah, so to that end, Nylon has actually deployed a version of the DAO to, a copy of the DAO to Rinkeby, and Nico has been working on some test plans for the relayers. And so like the hope here is this week, I think, to actually start that testing going. I'm a little behind due to the issues we've had with power here myself, but that stuff is in motion. And I think the other thing to note here is the pausing the bonding curve proposal. So the blocker on that had been the UI needing an update from DAOstack. I actually just checked because there was a PR that they had done to address it, and I actually just checked this morning. It looks like the UI is updated and the function is exposed. So I think that clears the way to make the pausing proposal. But I think one more thing we should, I think in the spirit of what I just said about the testing, and what I would like to see is, if we could hopefully do it this week, is test the bonding curve proposal on Rinkeby before we do the mainnet one. I wouldn't anticipate any issue there. It's an updating to the config and it's one parameter, but I don't think we should mess around with something like this. It's a pretty big impact. So let's do a good integration test first and then move it.
Awesome. Or good to hear any.
Yeah, I mean, it's a little bit of a bummer. I mean, I was kind of pissed.
Well, I was actually the
things up, and it's a minor setback in some ways that these couple of things had failures, but yeah, we're maturing, and like this is the way we should be doing it, and so yeah, we'll get that process in place and be better going forward.
Cool. Okay, and then moving on to the XDAI anointment. I kept spelling that wrong when I was trying to write it. I had to always right-click. But there is a proposal to authorize and fund the DXgov base. And that is just about to be boosted, and then hopefully from them we can move worker proposals and signal proposals and other things to XDAI. I think with a lot of things like we're seeing with the multi-sig and moving things there, like legitimacy builds over time. So we have to kind of slow our ways into this. But this is something I think that we've been working on the XDAI component for several months here. So I think this should be alleviate a lot of our concerns, and we should be thinking a lot more about the large transactions that we'll have on mainnet, and then shifting more of our governance to not just XDAI, but Arbitrum, maybe, and other more or cheaper options. So I know not everyone probably has done the XDAI, or it's submitted a proposal on XDAI. Alchemy should be basically the same. There was a process for mapping your rep if you had a Gnosis safe. Maybe next week we can do a proposal or something there if there's any questions. But any kind of thoughts on this? Any blockers we should be thinking of in terms of having the next round of worker proposals on on XDAI.
Seems like a good move, right? To save gas costs if people are fine.
Everyone hates gas so much. It's like,
And I think with it, we force all the members to actually realize that mainnet is not the right place. Like, it's just, I'm using XDAI more and more, not only on governance, but it just makes sense to not pay like basically paying nothing for transactions. It's awesome.
Or it's really good, and everyone should be really happy that gas price is really high and it's really expensive. It's right now going to the miners, but pretty soon it's going to start burning, and then ETH becomes a harder asset than Bitcoin. So maybe it's a positive thing.
bullish ETH. Here we go. Yeah, it is true though. The only way we like figure it out is we just do it and you learn, and like so it'll start the process. And I think
Geronimo had a really good observation yesterday when he was trying Avalanche, right? Like Avalanche has a Uniswap clone, so it's a DeFi scaling solution using Avalanche, and they've made it so you can use your Ethereum address pretty easily and things, I think. But it was like 0.7 AVAX or Avalanche token, which is like $3 to do a Uniswap trade on Avalanche, which has no usage compared to Ethereum. If Avalanche market cap was the same size as Ethereum's market cap, that would be like just as expensive as Ethereum. So like that's kind of
I'm like, I was surprised. Like, I actually expected XDAI transaction costs, but it seems like they even hard coded the gas price. So every time you do something on the C chain, the contract chain, you're like, it's basically all the time 470 GWI for anything. And I'm like, okay, $3 on a new L1 is not something I expected from a new generation L1.
Is it really $500? I just know that that's like, regardless, it's the bridge to Ethereum is going to matter for all of them, and like that transaction cost and the friction there is a huge component.
When Arbitrum.
Yeah.
We should check in with them because they were planning on March, but I'm not sure if that got delayed.
Yeah, we need to figure. Yeah. Let's think of something. If we don't in the product strategy call, we'll think of something. We just need like a way to engage with them or something to ask. Maybe I guess we want to have the DAO deployed on Arbitrum.
Yeah. We could just ask. I'll just ask right now.
Are we going to deploy a base to Binance chain, by the way?
Man, I was going to bring it up, man. I keep.
You're not a boomer, but you're something way worse, Nylon. Like,
do anyone know why it's getting like super hyped right now?
Because it's CZs, yeah. Everything is going to go on that chain. It's
but
pumped.
Why now? Like it's not new. It's not. What happened now? What made people actually start?
L1.
They can farm.
But you could do that before. So what's new? It's a pancake thing that made it.
I think it's it's been 6 months since like DeFi summer, right? Like DeFi is like still around, like, has been around for a bit, but in terms of like when it was like, oh, this is the thing, right? Everyone's gonna be building that. And I feel like this is just after like 6 months of this, you can finally start seeing some real copying. And I don't mean that in like a derisive way, just it's, they've caught up.
Yeah, and it's I guess it's Asia focused. I 100% believe Binance is pushing a lot of money into it because they can, and with that, like almost no transaction fees means everyone can participate, and it looks like it's basically Asia who are participating.
Yeah, the good thing is it's a different audience, and we actually have the opportunity to work with a team who is doing some similar things like Mesa and Swapper on Binance chain. Who we know those people, and like I think there are scenarios where an offering or like if there's an offering, it could be on Mesa IDO and it could be on Binance, whatever their platform is at the same time, because they're two different audiences. And so potentially we could do work with projects on that chain.
Yeah.
It has 5 nodes.
Oh no.
Hey, that's
Well,
one less than XDAI.
I heard it has 20 something nodes, but 15 of them are run currently by Binance, but they have a obviously
I think somebody made the point.
diversification.
Someone made this point on a previous call, but if we're going to do something like that with one of these L1 kind of ETH competitors, they should be paying us dearly to do it.
Yeah.
Yeah. Cool. All right. Well, that's XDAI. So we'll start talking about those. Hopefully, proposals will come in, and we can talk about them a little on this call too. Hopefully, with the proposal passes, and we'll move towards that. Next, I wanted to chat about governance 2.0. I think we are arriving at what I hope is final text. I'll paste it in here. There have been a couple discussions the last week about the migration process. So this is the rep inflation and the DXD distribution. And so added some updated text to that. One, I ended up going with for the rep inflation, splitting it. It was 5%, so 4% to current snapshot of DXD holders, or when the signal proposal passes, and then second, 1% to addresses that bought DXD off the curve, just as a way to like reward them. And of course, those like need to be claimed proactively. And the DXD distribution split it up into 2, that basically any rep address that has voted at least once, so participated in governance, is eligible for 3 DXD vested over 3 years at the launch of governance 2.0. And then secondly, any rep holder that has voted at least 3 times is eligible for a percentage proportion of the 10,000 DXD distribution that's then vested for 3 years from when governance 2.0 system launches. I think that's the kind of some of the language I was going for that, but I think we would want to be a little bit tight with that. I want to add something that John recommended, which is some possibility that if we do have a lot of rep addresses that end up claiming like the 3 DXD, you could see more than 10K. So I'll put something in there on that. And then, yeah, any other thoughts or questions about the signal proposal, anything other parts of the text to look at?
Yeah, I think so. Clarity on when those. So there's 2 significant dates, I guess, right? There's the signal proposal, and then the date at which the snapshot is taken, which is 6 months or more out. So when you're talking about the 3 votes, like any rep address with 3 votes, and which one of those is that benchmarked?
Right. Good. So I think that should be at least 6 months from the signal proposal passage, because there's 3 bullet points here under the 10,000 DXD. This DXD can be used for governance staking, and maybe I should be clear on that's for the governance staking into the voting power. Second is the snapshot of rep holders should occur at least 6 months from the signal proposal. And so then at 6 months, the vote counts would be counted.
Gotcha. Because I worry a little bit that leaves. So there's a couple of big dormant rep addresses, right? And I think the main sentiment from like the last call was we shouldn't be rewarding dormant rep addresses from like the initial staking period, and we certainly shouldn't be rewarding them the same as like other people who have been active. So I think that one thing I worry about with saying 3 votes in 6 months is it opens up the possibility that like these addresses, once they realize that there's financial stake here, they just show up, lob a few votes over the fence, and then all of a sudden they're getting the same, reward rate as everybody else. So my feeling would be that should be like with the signal proposal, or but yeah. That's my first thought. I have another thought, but I'm just curious what people would think about.
Well, that's partially concerned. I'm also wondering about where are we voting for the next 6 months? Are we calculating this based on XDAI? And how does that work basically what that means is what John said is that I don't even know if reps distribution is really going to change that much if we're doing everything on XDAI anyways. XDAI distribution, people are going to get rep on XDAI, but what about on chain?
Yeah, like every rep holder who's not represented right now on XDAI had and has always the chance to be to get in by doing a mainnet proposal, which ratifies their new address on XDAI. I don't see any reason why we shouldn't treat the XDAI base as the mainnet base. So we should go all in on XDAI, like even with our plans to move like 100 ETH value to the XDAI. I think we should start using it to save money and get used to a multiple network governance.
So in other words, go ahead. Just to clarify, like if some new voter came to XDAI in 2 months, they would then qualify for the 3DXT.
Yeah.
Oh, so just to kind of like on this topic, I was talking to Chris, and I'm working with Aura now on basically to do like a mass adding of rep. And like to do this in like a safe way. And there is a scheme, it's called a reputation admin, and we're trying to figure out how to do this with like the multi-call. That I don't know if you can do this with one transaction, like initiate the scheme and then mint the reputation to all of them. This might need to be 2 transactions because you're minting to 100 people, and that might fill up like an Ethereum block, like the whole block. So there's a chance, there's a possibility of doing this every 3 months. And then you're distributing reputation to a list of people. Let's say, someone calculates off-chain the difference that XDAI has made, and then once every 3 months, there's a transaction that goes on mainnet, which costs a shitload of gas, but it's just once.
So I think there's like 2 different things we're discussing here. Like one is like the voting component, or like how do we qualify a minimum level or show some kind of minimum effort proof of work to be, and then second is like how does rep count or like get distributed, right? And I think with the second one, we're really evolving away from just rep being I guess at the end of the day, like rep is like a ledger, right? You think about like it's just a ledger of certain actions that have like happened, and those actions right now are all happening on mainnet, but we probably want to like we want to allow that ledger to be able to like have different things that didn't happen on Ethereum mainnet, whether they have an XDAI now or they have Arbitrum in the future. So I guess like the question is we need to figure out how those actions count, and then we also need to figure out how they're recorded and whether they're like still recorded at the at the main chain. I think in terms of like rep as a concept, separate from like rep and how it's like whether it's on mainnet or XDAI, but like we have established certain precedents on like how rep is distributed, and I think those go regardless of how the system goes. So I think we have the 0.1667% monthly contributor amount, and so like that is what we've established as precedent, and I think every like worker contributor like gets that separate from that, we need to figure out how that's like implemented. And actually, like, does that mean everyone does one transaction every 6 months? Does that mean we do one transaction every 3 months that has like the rep, awards out? And so I think, there's going to be a lot with that. I think in terms of the qualification, maybe one of the things we could say with the qualification is that you need to have either voted 3 times or submitted a proposal that passed. And maybe we could even do this for the vote 1 time, because I think if you submit a proposal that passed, that mostly means that you're a worker, right? Because that means you've like done through a contributor that, so that will be someone there, or it means you're part of like the rep boost component there, because I do think it's important to have I think we want to expand and bring on new people and DXgov, but I think the 0.167% to rep holders is an appealing, somewhat appealing incentive mechanism for any like contributors, and so I think we want to make